Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today we'll be looking at the definition of income from continuing operations. As I do in each one of these fundamental analysis tutorial videos, I'll give you the actual definition, then we'll move on to look at some examples, give you a little bit more insight. The income from continuing operations is the profit realized from a business's core operations, which is expected to continue for several years into the future. Income from continuing operations is generated from running the primary business and excludes income from other sources. For example, income from continuing operations would exclude non-recurring income generated from selling the property of a manufacturing company, which would be considered a one-time benefit. Okay, I'm now on the Yahoo Finance page looking at the income statement for Walmart Stores Incorporated. Let me scroll up and show you that right quick. Doesn't really matter. I'm just going to show you this for an example here. And again, you can find this information anywhere. For any publicly traded company, you can find it at Yahoo Finance, Google Finance, MSN. Your discount brokers will have the information provided for you. It'll be also within the annual report for every company that you may be interested in buying or that you already own. Scrolling on down on the income statement, you will find, let me just move this right down here, move back up a little bit. Okay, break out the tools. Okay, after you have the operating income to this point, halfway down the income statement, you'll notice you have the income from continuing operations. This is in contrast to the non-recurring events. They basically break up the income and show you this is from the core business operations right here, and then everything below that is actually the non-recurring events. So such as if you were to discontinue operations or sell a part of your business, that would give you a positive benefit to the earnings temporarily. You wouldn't be able to sell that same company or the same branch of that company down the road. So obviously that would benefit your bottom line, your net income, but it would only be temporary. So that's what you're trying to differentiate here. And it's an important part of analyzing the income statement because this is what you expect, the investor expects to continue for several years into the future. So when you're buying into the business, that's the income that's actually going to be duplicatable. The income below that will be one-time benefits. So in this situation here, we'll break every single piece of this into a tutorial video. So we'll give you the discontinued operations analysis there, the extraordinary items here, effects of accounting charges, so forth and so on. But just to let you know that oftentimes you will see these headings, income from continuing operations or non-recurring events, and those are just letting you know how the income is broken down. And this, of course, will be the most important regarding the continuation of that business. Sometimes you will see massive change in net income from one year to another or from one quarter to another, but a lot of times that will be created by temporary one-time events. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.